The initial public offering of Adnoc Logistics and Services had enough orders to cover all shares within minutes, showing continued strong demand for listings in the Middle East. Abu Dhabi National Oil Co. is selling about 1.11 billion shares in its maritime logistics unit at 199 dirhams to 2.01 dirhams each, valuing the company at as much as $4.05 billion, according to a statement Tuesday. Order books for the IPO, which could raise as much as $607 million at the top end, were covered throughout the range and indicated demand exceeded deal size, according to a message to investors seen by Bloomberg News. Alcir Marine Supplies and Equipment Co., PJSC, National Marine Dredging Co., PJSC, Alpha Oryx Limited, ultimately owned by Abu Dhabi Wealth Fund ADQ, and Abu Dhabi Pension Fund have committed to become cornerstone investors and subscribe for about $180 million combined. The deal is the second listing of a unit by a state-owned Adnoc this year, after it raised $2.5 billion in the IPO of its gas business in March. It's still also set to be the second biggest IPO in the Middle East so far this year. Proceeds from initial public offerings in the Middle East had dropped 69% from the same period a year ago and stand at $3.5 billion, according to data compiled by Bloomberg. Lower oil prices and concerns about slower economic growth globally have weighed on the market, and the MSCI GCC countries index has fallen almost 17% in the past, and they wear comments saying WBC contacts in GCC metals. Still, the Middle East is faring a lot better than other regions like Europe, where IPOs are still struggling to get off the ground. Abu Dhabi has so far dominated listing activity in the Gulf, mainly thanks to Adnoc Gas's IPO, while Saudi Arabia has been quiet. And Dubai has not seen any of the large privatizations that made it busy last year. Adnoc has been selling stakes in its units since about 2017 as part of a strategy to help fund the diversification of the economy and reduce its reliance on more fossil fuels. It listed chemicals firm Borouge last year and has previously sold shares in its drilling unit and fertilizer company Fertiglobe, among others. Adnoc L&S plans to pay an annualized 2023 cash dividend of $260 million and expects to increase this by at least 5% annually. The firm, which has been expanding its fleet to cope with increased demand from the state-owned firm's businesses, is targeting capital expenditure of $4 billion to $5 billion in the medium term. It's also planning a compound annual growth rate of at least 10% for its revenues in the midterm. The institutional book building period runs until May 24th, with pricing set for May 25th. The retail offering will close on May 23rd, while the shares are expected to start from a fighting markup and a few surging in the government. We'll see how Citigroup Inc., First Abu Dhabi, Bank PJSC, HSBC Holdings PC, and JP Morgan Chase & Company have been appointed as joint global coordinators and joint book runners. Abu Dhabi Commercial Bank, PJSC, Arkham Capital Limited, Credit Agricole SA, FG Hermes, International Securities and Society Generale SA are joint book runners for the offering. One listed companies in the independent financial advisor.